OPEC Plus, the powerful oil cartel, has just surprised the world with an unexpected cut in production. Starting in November, the oil group plans to reduce its target production amount by 2 million barrels per day. This production cut comes as the energy dispute between Russia and the West continues to heat up. European countries are deeply concerned about what will happen to energy prices this winter, and the prospect of an economic recession and possibly even a winter gas shortage. What does this mean for consumers? What does this mean for energy markets? What does this mean for oil companies? What does it mean for the US economy? And what does it mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. OPEC Plus has agreed to cut oil production by a whopping 2 million barrels per day. For those of you not familiar with OPEC Plus, it is a group of some of the world's largest and most powerful oil-producing countries. OPEC Plus includes Saudi Arabia, Russia, Iran, Iraq, Algeria, Nigeria, and other oil-producing nations. It does not include the United States or Canada, two of the world's largest oil-producing countries. Saudi Arabia is seen as the informal leader of OPEC Plus. This powerful oil cartel agreed to impose deep output cuts Wednesday. Oil prices have been falling for weeks now, and the group is trying to spur a recovery in crude oil prices. All of this is despite calls from US President Joe Biden asking the cartel to increase oil production. Gasoline prices at the pump have spiked in the past week or so. And President Biden wants to help the global economy by keeping prices low. Today was the first face-to-face meeting of OPEC Plus in Vienna since 2020. And the group agreed to cut production by 2 million barrels per day starting in November. Some production cut was expected, but 2 million barrels was at the very high end of the expected range. Recall that in 2020 worldwide crude oil prices briefly went negative during the height of the pandemic. At that time, OPEC Plus made an emergency production cut of 10 million barrels per day just to stabilize the oil market. But large production cuts are uncharacteristic of the group. And, historically, production cuts have been difficult for the group to enforce. Today's cut of 2 million barrels per day is unusual for OPEC Plus. The production cut represents a major reversal in production policy for the group. Worldwide oil prices have gradually dropped to around $80 a barrel last week. Crude oil prices peaked in June at more than $120 per barrel. But fears of the prospect of a global economic recession have put oil prices on a persistent downward trend since then. And high oil prices typically bring about demand destruction as people drive less when gasoline prices are higher. The production cut of 2 million barrels per day is intended to reverse this decline in oil prices. US President Joe Biden has repeatedly asked the group to keep prices low by keeping production up. Midterm elections are coming up and incumbent administrations fare better when gasoline prices are lower. International benchmark Brent crude traded up 1% at $92.82 per barrel on Wednesday. US West Texas Intermediate was trading up 1% at $87.37 per barrel immediately following the announcement. OPEC Plus is scheduled to meet again on December 4 in Vienna. President Biden was disappointed by the short-sighted decision by OPEC Plus to cut production quotas while the global economy is dealing with the continued negative impact of Putin's invasion of Ukraine, said the White House in a prepared statement. President Biden had directed the Department of Energy to release another 10 million barrels from the Strategic Petroleum Reserve next month, the statement added. In light of today's action, the Biden administration will also consult with Congress on additional tools and authorities to reduce OPEC's control over energy prices, the White House said. The OPEC Plus announcement served as a reminder of why it is so critical that the United States reduce its reliance on foreign sources of fossil fuels, the statement also noted. Burning of fossil fuels, like oil, natural gas, and coal is the main factor in global warming. As coal, oil and gas, is the chief driver of the climate emergency. OPEC Plus is seeking to provide security and stability to the energy markets, said OPEC Secretary General Haytham Al-Ghais at a news conference after the meeting. Everything has a price. Energy security has a price as well, Al-Ghais also said. Energy analysts expect the impact of the cuts to be limited. Most of the production cuts are expected to come from Saudi Arabia, the United Arab Emirates, Iraq and Kuwait. Energy analysts point out that it is difficult for anyone to predict oil prices 2 months in advance these days. The future of the economy and energy prices are highly uncertain as more European sanctions on Russia are added. These sanctions affect shipping insurance, price caps and limits on petroleum imports. In its own words, OPEC Plus mission is to ensure an adequate pricing environment for both consumers and producers, said Stephen Brennick, a senior analyst at PVM Oil Associates in London. Yet the decision to reduce output in the current environment runs counter to this objective, Brennick continued. Further squeezing already tight supplies will be a slap in the face for consumers. The selfishly motivated move is aimed purely at benefiting producers, Brennick added. In short, OPEC Plus is prioritizing price above stability at a time of great uncertainty in the oil market, Brennick also noted. This decision to impose production cuts could see oil prices rally back to $100 a barrel, Rohan Reddy, director of research at Global X ETFs. But that assumes no major bouts of COVID globally in the U.S. Federal Reserve not becoming unexpectedly hawkish, Reddy continued. Due to the decision, volatility will likely return to the market, and despite concerns about the resilience of the global economy, the oil market is tight, all of which should serve as a tailwind for prices in the fourth quarter, Reddy added. While a return to $100 oil is possible, a more likely scenario in the short term is that oil prices hover in the $90 to $100 range as the market digests economic data releases, Reddy also noted. The output cut takes effect starting in November. President Biden visited Saudi Arabia in July to request that the OPEC kingpin pump more oil in order to reduce prices and stimulate the global economy. Oil prices have been on a roller coaster ride in 2022. Prices reached a two-year high in March. But oil prices fell 25% between the middle of June and the end of August. The price decline has been driven by the expectation that interest rate hikes by the U.S. Federal Reserve would reduce demand for gasoline, and by concerns that COVID-19 restrictions in China would slow the Chinese economy and reduce oil demand. Although gasoline prices are generally high in the U.S., they never really got as high as many consumers feared. The average price of gasoline in the U.S. reached a peak of $5.02 per gallon on June 14. Since then, the average U.S. gasoline price has fallen to $3.79 per gallon. Gasoline prices in the United States are lowest in the South, where the average price is now $3.30 per gallon. Consumers have been unbelievably lucky. All the worst fears have not materialized, said John Kildiff, partner with Again Capital. U.S. has become a major refiner and exporter of oil and petroleum products since 2016. The United States now exports 10 million barrels of oil and refined petroleum products every week. Exports of gasoline totaled 1 million barrels a day for the week, compared to 466,000 barrels a day in the same period last year, said the U.S. Energy Information Administration in a prepared statement. Geopolitics remains a key driver of oil prices worldwide. But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.